Welcome to Alpha Recap. Markets closed after an active session, and we're unpacking the biggest moves now. From semiconductors to rumor-driven tech swings and a chunky financing in the resource space. As always, if you have questions, you can reach us at stockalpha.ai. I'm joined by Ben, our commodities and markets flow expert. Great to have you on.
Thanks for having me. Happy to dig in. It was one of those days where flows and headlines really set the tape.
Let's start with the headline that got the most volume. NVDA finished the day down just over 0.5% to about $186.50, but it traded heavy, roughly 124 million shares. Meanwhile, a leveraged semiconductor bear exchange traded fund jumped about 2.2% on dramatic turnover. Ben, what did that combination tell you?
That mix screamed positioning and hedging more than a fresh fundamental shift. When a bellwether like NVIDIA trades heavy but only slipped a touch, and a leveraged bear ETF rallied strongly on huge volume, it usually means traders were adjusting risk, buying protection, layering shorts, or rebalancing quant books.
You mentioned hedging. Walk us through why traders might buy a leveraged bear product instead of just selling the stock.
Good question. Leveraged bear ETFs offer quick directional exposure and are easy for short-term strategies and momentum funds. They're used for tactical hedges or to express a bet that a sector will pull back. For some players, they're operationally simpler than shorting multiple names or juggling option positions, but they also amplify volatility and can create feedback loops.
And there was a risk comment in the brief about gamma and option sellers. In plain English, what was the concern there?
Gamma is a measure of how quickly option delta changes as the stock moves. When volume and options activity spike, market makers who sold options might need to rebalance more aggressively, buying or selling stock into moves. That can magnify whipsaws. So with elevated volume in both NVIDIA and that bear ETF, the chance of intraday reversals went up. Option sellers could be forced to trade in size, which makes the tape jumpier.
So the takeaway on semiconductors was more about flows than fresh news. Let's pivot to big tech. Google Trends showed searches for Amazon layoffs jumped 100% to about 10,000 searches. That pushed search-driven rumor risk into the headlines. How much can search behavior actually move a mega cap like Amazon?
Search spikes are one of those early warning signals. For a mega cap, even unconfirmed chatter can trigger fast repositioning because index funds, quant models, and headline-driven traders react quickly. Social amplification can make a small rumor feel like a bigger story, and that can pressure related retail and ad tech names as well.
What should listeners have looked for after that spike?
Credit the usual checklist: any official company statements, SEC filings, or credible reporting that confirmed or denied layoffs. Absent that, you watch follow-through in trading volumes and sentiment indicators. If the story got picked up by primary outlets, then it turned from rumor risk into real headline risk.
All right, switching gears to financing. IsoEnergy closed a bought deal for about 57.5 million Canadian dollars. That's sizable for a junior resource company. Explain what a bought deal means for investors and why it mattered today.
In a bought deal, underwriters commit to buy the full financing and then resell it to investors. That gives the issuer certainty and quick access to capital. For a junior in mining or uranium exploration, closing that size of financing reduced near-term dilution worries and extended the company's runway for projects. Market participants saw it as a concrete liquidity event, not just talk.
And what should holders of resource stocks watch next after a deal like that closed?
Two things: the company's disclosure on use of proceeds, where the money will be deployed, and any operational catalysts that the financing enables, like accelerated drilling or engineering work. Price and volume response after the financing will tell you whether the market bought the story.
The briefs also called out a cluster of operational moves, things like a new VAR program for IsoEnergy, Evernex opening a North American technology center, and an exclusive alliance between Univar Solutions and Ashland in EMEA. These aren't headline-grabbing M&A, but the note suggested they can be early earnings indicators. Ben, why are these incremental operational plays important?
They're important because they signal management's deploying capital and resources to expand distribution and service economics. Channel programs accelerate customer access, regional tech centers improve service response, and can support sustainability objectives, and exclusive distribution deals open new end markets. Often these moves show up in quarterlies as improved revenue cadence, better margins, or higher recurring service revenue.
From a trader's perspective, are these items the kind of news that can move a stock next quarter? Or do they generally matter more to longer-term investors?
They can matter to both. For traders, a clear, credible partnership or rollout can spark a re-rating, especially if it points to faster revenue growth or margin expansion. For longer-term investors, repeated operational execution builds a stronger thesis. The market tends to reward sustained delivery.
A lighter set of briefs pointed to the experience economy. Escape rooms gaining momentum. A pet care franchisor reporting record system-wide sales of about $34.8 million and mid-single-digit same-store sales growth. And a VR program for floral design certification. What pattern were you seeing there?
The theme was resilience in niche experiential and service businesses. Consumers still spend on experiences and specialized services, from pet care to immersive entertainment and tech-enabled vocational training. For investors, that suggests pockets in consumer discretionary where pricing power and consolidation could emerge.
Quick hits in the brief also flagged sustainability and circular IT services as a consistent theme with Evernex. Is that just noise or a real secular trend?
It's a real trend. Corporate procurement increasingly factors in sustainability and total lifecycle cost. Third-party maintenance and remanufacturing can be a growth area as companies try to extend asset life and meet ESG targets. That's not a flash in the pan.
Before we wrap up, let's summarize what traders and investors needed to digest from the session. What were your top takeaways?
First, flows and headline sensitivity drove the session more than fresh fundamentals. Heavy volume in semiconductors and a leverage bear ETF suggested hedging and short-term positioning. Second, search spikes and rumor amplification around big tech can produce outsized short-term moves even without confirmation. Third, bought deal financings like IsoEnergy's provided real liquidity and were meaningful for resource juniors. Finally, incremental operational moves across distribution, service hubs, and niche consumer plays continue to signal where companies are deploying capital for growth.
And the practical checklist for tomorrow?
Watch whether NVIDIA's small pullback had follow-through in price, volume, and implied volatility. Monitor flows into semiconductor products. Continued inflows into the bear ETF or sector ETFs could pressure semis more broadly. Track any official confirmation or denial of the Amazon layoff chatter. Look for updates from IsoEnergy on use of proceeds, and see if HCI or partners announced further VAR signings or rollout details. And of course, keep an eye on macro prints or Fed commentary that could swing growth versus defensive positioning.
Great roundup. Any final quick advice for listeners managing risk after a day like this?
Keep position sizing tight when volume and rumor risk are high. Make sure your hedges match your exposures, and be mindful that leverage products can move quickly both ways. If you trade options, account for gamma risk when volumes spike.
Perfect. Thanks for walking us through all of that. To recap the key points, semiconductors showed heavy flow-driven action. Big tech felt rumor risk from search spikes. IsoEnergy's bought deal materially refreshed balance sheet runway, and channel and experience economy moves pointed to operational deployment rather than financial engineering. Active risk management mattered today.
Exactly. It was a session defined by flows and execution, so vigilance mattered more than new fundamentals.
That's it for today's Alpha Recap. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening. We'll be back after the next market close.